Welcome to the Execution is King podcast, where we talk to successful startup founders, investors, and ecosystem builders to uncover insights and best practices for the next generation of great global startups. Today, my co-host is managing partner of Great North Ventures, Rob Weber. Hey, Rob, how are you doing today?
I'm doing fantastic. I'm riding on a high.
Oh, why is that?
We just recently announced, coming out of stealth mode, our fund's first venture studio project, which is NextGem. It's a social app for the trading card collectors out there. And I'm a huge trading card collector, so I'm especially passionate about this one. My brother Ryan and I have been big on and off sort of collectors. We picked it up again maybe 10 or 15 years ago, but as kids, we were big time trading card collectors.
It's really exciting with the venture studio. You know, like you and your brother Ryan have this great focus and knowledge about when it comes to product management. That's something that I've dabbled in a little bit, but I really don't know what to look for in a great product manager, or what to, like how to create that product myself, really.
Yeah, I think the timing is really interesting, as our guest today, Atif, is actually came out of one of the leading global venture studios, Idealab, out of Los Angeles, which is where he's from. You know, Idealab is had some of the biggest successes. They invented paid search with their Overture business, which everybody knows how much of Google's revenue comes from search traffic. They kind of ripped off the idea from Idealab's Overture, and that was a multi-billion-dollar unicorn outcome, and there's many others, of course. And I think that's one of the things I'm really excited about the conversation with him today is he's just an incredibly strong product-driven leader. I think there are a variety of founders come from all kind of functional backgrounds, but I have to say one of the things that really I get jazzed about is when I get to work as an investor, when I get to participate along the journey of a really strong product-driven founder. It gets me really excited. So I think this is going to be a great episode.
All right, well, let's get to it. Atif Siddiqi is the CEO and founder of Branch. Welcome to the podcast, Atif.
Thanks for having me.
I think for our first question today for Atif, I'd like to just start back. Let's go a little bit before even the founding of Branch, your current company, and talk about your path into entrepreneurship. What were you doing as a teenager or as college and beyond, and maybe spend a couple minutes talking about how you became a founder and what led to sort of Branch, maybe the origin story.
Sure. I'll go even before my teenage years. When I was younger, my first entrepreneurial pursuit was renting out my Nintendo video games to the neighborhood kids. And I had quite a good business going until, one day we had a couple of bad apples that didn't return games. And, I had to send in the muscle, which was my mom, to go recover them. And so that was that. But for me, I started getting involved in various product roles at startups in Los Angeles and went to business school with the goal in mind that I wanted to start something and just get a better business background. And while I was at business school, I linked up with a serial entrepreneur in Pasadena, California, named Bill Gross, who was the founder and CEO of Idealab. And it was really there where, after I graduated, they started a new entrepreneur residence program. And for those of you not familiar with Idealab, it's a big technology studio and incubator where they take early stage ideas and really guide them along their journey. And that's where Branch was really born. It was, as the EIR at Idealab, I was able to create this with a mission in mind of helping working Americans grow financially. And I could dig into that journey as well.
I think it's just incredible, Idealab. It's one of the most successful venture studios of all time, having hatched, some of the biggest companies that have ever come out of a studio. And with our Great North Venture studio, it was really a source of inspiration when you see how some of the advantages that can come out of a studio model. It was really influential in thinking about how we would launch our own. I know there was kind of a pivot to the Branch story. Maybe you can walk us through the initial value proposition and what you set out to build, and then walk us through kind of that pivot and where you're at today.
Definitely. So at Branch, really, we sought out, our mission at Branch was to help working Americans grow financially. And this was really born through my own, firsthand experience as an hourly worker on the front lines where, a lot of these workers were looking for ways to, improve their cash flow. And so when we first started, product looks fundamentally different than when we are today, like most startups, twists and turns along the way. And it was really about helping these workers pick up shifts at the companies they already worked at to earn more income. And ultimately, I think what we found was the reason they needed more income was because their income was very volatile, right? It was hard for them to manage cash flow. And so when we looked at, this problem and came across the cash flow concerns for these workers, I think one of our strengths was we were plugged into all the HR systems at the workplace. So we knew when the worker, how many hours they worked, how much they made. And ultimately, we had this crazy idea, probably a year and a half, 2 years into our journey with Branch, where we said, like, hey, if cash flow is such an issue, how about we just provide these workers small amounts of capital on our balance sheet, mind you. It's pretty risky, but they've already earned it with the hopes that we get it back. And we did that little test, and quickly we found about 3 months, we surpassed all growth than we saw in the previous 2 years, right? And so we knew we were definitely onto something here. We tapped into a really strong sentiment, a problem that we're solving for workers. And that's when we started really digging into, okay, what are the financial services and what is their financial lives of these workers, and have really created now a suite of services to improve financial services for hourly and gig workers.
I think it's such an inspiring business. It must be really easy to get out of bed. Like when you think about the past decades and how larger financial institutions just screwed over low income workers, high interest payday loans, or high APR credit cards, and to be able to just clean up this sort of predatory behavior. Like there's nothing worse than, an industry that preys on the low income, right?
I remember in college, I had a good friend who worked for a payday loan place, and I had an interesting discussion about the ethics of it because, they had a good point. Their boss was like, we're providing a service that these people need. These people need access to cash. But on the flip side, yeah, incredibly predatory.
Yeah, incredibly predatory. And I think one of the big insights for us at Branch was, again, like, how do we provide these services to this demographic in an equitable way? And really, we had to take a hard, long look at, a business model that hopefully aligned with the interests of the user. And so as part of the pivot, we also pivoted from a B2B SaaS platform to a financial service platform that's consumption based off of interchange revenue. So the product's free to both sides, both the companies they work for as well as the worker. And we found a way to, off of interchange. And for your listeners that aren't familiar what interchange is, it's anytime you go take your debit card and go swipe at a merchant, that merchant pays a fee to MasterCard, and MasterCard splits that fee with us, right? And so looking at our mission and our goal, it was a nice way to not only create a product and service that aligns with the user, but also a business model. So as they grow and hopefully have more money in their accounts, we're along that ride too and are growing with them.
So when we first met, I don't know how long ago this was, probably now like over 5 years, I imagine.
5 years, yeah.
Yeah. I mean, it was one of these things when I first met you, I thought when we started talking about like product, it was just like immediately I just felt like, oh my gosh, you're someone I want to be around. And I guess for me, I like working with all kinds of different founders, but like the founders who are really strong at product management, product design, and just, kind of have that kind of compelling vision, but can back it up with execution on the product side. Those are the founders that like really stand out to me. Of course, like when you're dealing in the enterprise world, you have a lot of founders that have more of a sales driven mentality, especially historically. And I think, the changing landscape of not only, enterprise software, but also fintech, you're seeing the consumerization, which just really resonates with me with sort of the coming from social gaming and the kind of background my brother and I had. What was sort of the inspiration for you? How did you develop this like insane, product management kind of competency or product leadership competency?
Yeah, I think it's one, being around good leaders in different product roles, but more importantly, it's failing a lot, right? Let's be honest. Like the only way you learn really in this game is you go out, you execute, you learn, and those things stick with you. And probably like my product philosophy has always been just like, you have to keep shipping, right? I think one thing that's very underrated just in general and for startup founders is momentum. And when you ship product, you're learning, you're testing, you're iterating, and you're building momentum. And that momentum just starts compounding, right? And you start yourself getting traction and growth. And that's really, really powerful because nothing, is more exciting than, that feeling of just pulling you, the market's pulling you and your product is getting better. And, it's really funny. I just had a team meeting where I reiterated the sense of the Reid Hoffman quote, right? If you are not embarrassed by your first product, you've shipped too late. And I put on a big slide, like the first branch logo, which was really embarrassing. And I just made it in Photoshop, but that was on the App Store. And luckily today we have a great design team that has fixed that. But that was embarrassing, but it was out there in the world. And so I would give that advice is just keep shipping.
I totally agree with you. I've been rereading the book Super Founders, where they did research on basically unicorn founders. One of the outliers versus all founders who receive venture funding is just this serial entrepreneurship. And it's not even just tech, and it's not even just being successful. Like the most successful unicorn founders, they're serial entrepreneurs and builders. It's like part of who they are. I think that's how great businesses start, though. You could go look at the first version of Uber and you go, that's Uber?
So a lot of people in startup land talk about, failing quickly and often, but not a lot of people talk about recognizing when to stop failing. You mentioned coming across this period of growth that exceeded your past 2 years' growth. How exactly did you know when to pivot? Were there inflection points, or what did you recognize where you were just like, this is the point, we need to make this decision and pivot?
Yeah, for us, the big inflection point was really when we started seeing active usage taking off and customers started, end users started pinging us, both good and bad, about this new feature around earned wage access. They had requests on how we can make it better. And that's when we felt really, we talk a lot about product market fit as founders and startups. And we did feel the market really push the product forward and accelerate that product forward to help keep building momentum. And that's, when we knew we really tapped into a strong sentiment in the market and have continued to iterate around building better financial services for this demographic.
So I know one of the common links between us is we both have companies that kind of scaled starting in the Twin Cities. And I guess I understand you've moved to more of a remote first approach with your team. Can you talk about what it's been like kind of scaling outside of a primary tech, or what would be historically thought of as like a primary tech center, like the Bay Area or maybe New York or Boston or something like that? What's that been like? And then also making that transition from kind of the primarily an in-first team to more of a remote first team.
Yeah. So, coming to Minneapolis, maybe to give your listeners a story, originally from Los Angeles, we moved here as part of the Techstars Target Retail Accelerator. We were part of that first class in 2016, had no ties to Minneapolis prior. And so, one of my challenges was how do I build a network? How do I, start meeting people in the area? And what was great is, one, there's great investors like Rob and others that were able to do some of that. Yeah. And early on, it was a lot of recruiting through our network, and we found really great talent. One of the things that we found about Minneapolis is a great place for B2B software, people that know how to sell into companies, how to implement on the customer success side market. And so we started building out a core team there. And then, obviously fast forward to the pandemic, like many companies, they had to reevaluate kind of, what that hiring looks like in that period. And, we were really fortunate where we saw some tailwinds from the pandemic, and our team was actually growing pretty rapidly. And so, we had to adjust to this remote first culture. And for us, that meant a little bit different ways we operate, asynchronous communication, document everything. And it's worked out really well for us where, now we've been able to recruit talent all over the country. I forgot the latest on how many people we have, but I think it's, upwards of more than 15, 20 states around the country. And we've been able to grow and move really fast. But ultimately, I think it comes down to the mindset and culture and making sure that, you recognize kind of the adjustments you need to make as a remote first team.
So you went through a period of growth while you were adjusting to remote first culture?
That's right. Yeah. I think when you look at kind of our product and helping workers on the front lines, be it hourly workers, gig workers, these were working Americans that even during the pandemic, they were keeping stores stocked, they were delivering food. And so we definitely saw acceleration in certain key verticals. And we've developed new products along the way, like our digital tips product, which was used by a lot of quick service restaurants doing delivery. And so we were hiring all around the country during that time.
I wanted to kind of switch gears and talk about how startups raise money from venture capitalists. It seems like you've been able to raise capital fairly quickly and efficiently, but could you maybe describe more, not so much like the names and who invested, but more of the process? I read this book the other day from Ryan Breslau, I think is how you pronounce his name. It's called Fundraising, and he kind of describes his fundraising process. My experience is that it's often a process breakdown. Like they're not really, it's more of like ad hoc. And I'm curious if you develop more of a process or any advice you would give to founders as they're thinking about raising from VC.
It definitely is a process. And, I think for me, one of the things that I've always taken away with relationships with investors is just making sure that you're intellectually honest about what you know and what you don't know, right? And the things you don't know, you can go figure out, with additional capital, and that's why you're raising money. So know why you're raising in the first place, and it helps just build credibility because the more you figure out what you don't know, you go back and you have new data, and that helps build credibility. You accomplish the milestones you set out, and that kind of compounds that relationship as well over time. And one of the things that's helped for me, especially early on, at the really early stages, is almost over communicating. I would do weekly updates to my network. And it was a great way to also build accountability to your team and this culture of like, hey, if I say I'm going to do something, I'm going to do it. And that was really great too. And then, over time that goes to monthly updates and quarterly whatnot with your investor group. But you also have to make it easy for investors to help you, right? And others to help you. And people generally want to help and be helpful, but these updates that you can provide just lets them build, I think, a series of dots that they can connect over time and show that momentum and growth.
I've been playing around with TikTok lately, and one of my first videos was about this whole notion of, don't be transactional. I think I'm really bad at TikTok, by the way, but it was, I think the average marriage in America is 8.2 years. And like for successful VC-backed companies, especially the funds that come in early stage, like a seed round, that, they often are in your, with you for 7 or maybe 9 to 10 years or more. And so that means the average VC investment lasts longer than the average marriage. And this is why you got to think about, building relationships. I think this industry, maybe with the, you could get lost in the noise of reading all the big venture rounds that are happening on TechCrunch or whatever. But it's so important, I think, to be authentic and build real relationships. And it goes both ways. Like the founders, I think you want to get to know the VCs and make sure they're the right partner for you and vice versa. I'm very much relationship driven. I'm not transactional. I can't stand it when a founder reaches out to me right at the moment they want to raise for the first time and they say, here's my pitch deck. It's like, whoa, like, slow down. Maybe we'll get married here, but we got to date first, come on.
Definitely. No, it is a very tight relationship. And I will say though, for founders at least, it is a great time to be a founder, right? There are many opportunities, especially the early stage for capital. There's angel syndicates and networks you could tap into. There's accelerator programs, a slew of accelerator programs like Techstars, the Y Combinators, 500 angels, 500 startups. So those are also great places because if you don't have a network starting out, you kind of have built-in networks to some of those accelerator programs as well.
Yeah. Like I can engage with a lot more people over Twitter than I can say have in-person meetings. That's a great way, I think, for founders, especially as I think VCs are more open about. It used to be you got to move the Bay Area to raise money. You got to be based there. That was already trending towards being thrown out the window. But then especially in the wake of COVID, it truly doesn't matter. I don't think where you're at in the world. It's just, find ways to build relationships. You came out of, as an EIR out of Idealab. What did you see the pros and cons of sort of working within a venture studio? Because that's a whole different framework in terms of resources that you might have. And what were some of the advantages or disadvantages?
So Idealab, just backing up a bit, traditionally, a lot of the ideas and companies that came out of Idealab were created by Bill Gross, right? And then Bill would form management teams and operational teams around these ideas to go out and execute. Over time, I think one of the things they saw was like, there was value in bringing entrepreneurs in-house and letting them go out and form these teams themselves. And they would be the first check-in because they had an early view into the company. And so I came in on the latter kind of part of the Idealab strategy with company formation. I think for me as a solo founder, it was really great because one, they had resources that can help get products off the ground. So think design resources, supplemental engineering resources. And then also, as the company did start growing, some of the help around some of the, general administrative aspects of running a company. Like I didn't have to worry about legal, HR, accounting, and I can focus solely on product building, talking to customers and solving problems for customers. And so I thought for me, that was really instrumental. And then, thinking about networks, right? Oftentimes these venture studios will be the first institutional capital into the business. And that again, builds a network and some validation that you can go out and execute and grow pretty quickly at the early stages.
Yeah, I think that's so interesting because I think it's something like the media doesn't really talk a lot about when they celebrate successful founders or startups. Being a founder really means you have to have general knowledge across all functional areas, within your founding team, or you got to be able to quickly acquire that because you're going to be the CFO, general counsel, the CTO, the VP of sales. You're going to be the head of ops. You're going to be everything. And so I think that's where a venture studio, having launched our latest startup, our first venture studio startup, NextGem, I had never done any of that in probably, 20 years because the bootstrap startup we got all that done. And so we were able to take that on for the NextGem team as a fund. And there are better tools that startups have now to make it a little bit easier. The other thing is knowledge is more freely available than 10 or 20 years ago with all of the just explosion of resources for supporting founders. But to have that opportunity with the studio, I think that can be a real advantage.
It's one thing to have the knowledge, but then it's another thing when, you find yourself in the middle of a pandemic and you have to shift your entire huge 15-state team to remote first while adding 5 other states worth of employees. It's one thing to have a little bit of HR, but you guys must have a rock star HR team over there.
We do. Yeah. No, we have a great people operations team, a great people leader.
Yeah, I was going to say, just setting up payroll, think how much time an average founder spends setting up payroll. It's not going to add value. It's not going to make your product any better, right? But you have to do it.
Is there anybody that you see executing, whether it's an individual at a startup or maybe it's just a startup itself, but somebody, maybe they're flying under the radar and maybe it's Disney or something but just somebody that you really see performing?
Yeah, I've been a big fan, especially after he bought the Timberwolves. Mark Lore, he's across many different industries, continue to execute, and in fact, just more ambitious, I think, in his new endeavors, whether that's the new city he's building or the new, I believe, food delivery kind of startup. Yeah, so I think when it comes to execution and a great CEO, it's Mark comes to mind.
Yeah, I think we'll see. Maybe we'll get Mark Lowry on as a podcast guest. I think he's pretty, definitely. I would agree with you. He's, and we had a prior guest on who bootstrapped at the age of 27, bootstrapped a startup to 50 million in annual revenue from down in Miami. When I thought, man, it'd be interesting to talk to someone like Mark who did it the exact opposite way. His startups have raised just a tremendous amount of capital right out of the gate. And especially in this world where we talk about the MVP and, starting very iteratively. But I think there are certain times where businesses that are better off just having more resources to start with and building to scale from day one. It's not everyone has to have groupthink. There's multiple ways to build a company, right?
There should be a term for that, like coin pursing or something. Thanks so much for joining us on the podcast today, Atif. We really enjoyed having you.
Likewise. No, this is great. Appreciate it.